One of my favorite aspects of entrepreneurship is just like the classic risk reward equation. I sort of learned through experience early on to be comfortable with risk. And I think that a lot of what the value that you create as a founder is sort of just your perspective and how you view things. And sort of an easy hack for that is to just sort of take the other side of what the general population say. So
Yeah.
whenever it's like, oh, this is a really tough time, that should be your signal that like this is actually a moment of great opportunity. Those businesses are started at a time of dislocation. It's like everyone else is pulling away from the market, they're running away. That's when I want to try to run towards the opportunity. I'm Bobby Touran, co-founder and CEO of Rainbow, and this is the future of insurance.
Bobby, it's good to sit down with you. I'm definitely excited to do this and to hear another startup story. It's been a little while since I've had an MGA in your case on the show, but excited to hear some more. So before we jump into that, who are you? Because you've got an interesting background and been working your way into insurance over the years. So tell us about you.
Yeah, thanks for having me, Brian. Excited to be here too. Yeah, I've been working as an entrepreneur, as an operator, but also as just sort of a supporter of startups for basically my whole professional career, so about 15 years. And I just realized the other day that I've now spent the majority of that, roughly 8 years now, working in insurance. And if you'd asked me 8 years and a day ago, I probably wouldn't have believed it. But yeah, I've loved every minute of it. And this is my second venture in the insurance space, and excited to tell you all about it.
So your last one was on the distribution side, and you're moving further and further along the spectrum now to actually underwriting and tell us about, I mean, you get the logo there, but it's Rainbow. Tell us about Rainbow and what is it that you're building?
Yeah, so my first company, which was kind of my baptism by fire into commercial insurance, and commercial P&C is really all I know about in insurance. So the previous company, Pathpoint, is a digital surplus lines exchange. It effectively acts as a surplus lines broker, but it connects E&S products that are almost exclusively available via API in the binding authority part of the market. So that's small commercial side of the market with retail agents. And so that sort of overlap between retail agent distribution, selling products, insurance products online, and just broadly speaking, the small commercial end of the underwriting spectrum, something that I spent a lot of time on. And like you said, that company is sort of purely focused on the distribution part of it.
Yeah.
And what was always kind of intriguing to me, maybe because it's the grass is always greener type thing, I just wanted to kind of better understand how the sausage actually gets made and
Yeah.
get closer to thinking about innovative underwriting. Um, so Rainbow is an MGA. We're focused on opportunities in different niches within small commercial. We distribute through agents. We don't do any direct distribution through an online quote bind issue platform that our engineering team, our in-house engineering team has built basically from the ground up. And the very first, we have this verticalized approach to the programs we want to launch. So, unlike some other companies which offer a very broad BOP appetite, and our product
Yeah.
is through a portal, we have specific niches. So, our first niche, which we launched in July of last year, is focused on restaurants. And so, we have fairly broad appetite within restaurants. And the sort of the vision is to sort of stand up these uh, subsequent verticals that will sort of build on the existing distribution and the existing platform, and where possible, the existing data we've used to just keep trying to drive loss ratio improvements. Loss ratio is really like our North Star in terms of a key metric.
There's so much I want to ask about, and I do love these moments where I get to talk about, well, specialty lines and E&S. You mentioned that stuff, but also commercial lines. So much of the activity and the AI discussions, everything is very personal lines focused. A lot of the startups are very personal lines focused. So my background past several years is more in this space. So I'm geeking out personally right now. But I do think when you said restaurants, anyone who's in the commercial line space, probably like half of them were just like, oh, that's terrible. You can't make money doing restaurants. Or they're like, well, maybe if they don't have liquor licenses. So are you talking about broad brush, liquor, no liquor?
Yeah, no, the I think what you said is true.
Yeah.
having shopped the program for reinsurance personally, I definitely heard a lot of those reactions.
There's strong opinions on it. Yeah.
But I think for us, what we wanted to do, we do have a broad brush appetite. We can write businesses absolutely that have healthy liquor sales as a percentage of their overall sales.
Yeah.
We can write new ventures. And I think the reason that we were able to put together a program that was able to uh, sort of take advantage of a lot of those types of restaurant risks that might otherwise go E&S, or that, it's just trickier for reinsurers to get comfortable with. I think it's because we are very specialized and deliberate in our focus.
Yeah.
Uh, because we focus just on restaurants with this program, we're able to connect third-party data sets, which are super specific to the restaurant industry
Yeah.
and food and beverage, versus using and that's how we really think about, this is a whole different topic we could talk about. That's really how we think about the value that can be created in using third-party data, more so than let's use third-party data to pre-fill as much as possible,
Yeah.
which is just like a kind of a, I've learned, I didn't appreciate it before, but I definitely see it now. It's like a fundamentally different way of thinking about third-party data. But yeah, we looked at small commercial broadly and we were like, okay, what are the biggest segments within small commercial? And hospitality is kind of like the second or third largest bucket behind contractors and retail. And then within hospitality, you have hotels and motels, which is very property driven,
Hmm.
not exactly the best climate for that right now. But restaurants was one that was huge, not about to go away. I mean, people are
Yeah.
going to keep eating food, and they just need insurance.
Yeah.
And so, just the fact that certain folks were like, historically, we haven't been comfortable underwriting restaurants, kind of signaled an opportunity to us to be like, okay, well, how are we going to do it like moving forward?
Yeah.
Because businesses still need insurance.
Yeah. One is it is a really interesting time without naming names or anything. One of the largest writers of BOP in the small commercial space basically pulled out pretty much nationwide, at least on new business, and I'm sure their
Yeah.
real terms have been tough. So it's not a bad time to go into the market if you have an understanding of the risk you're writing. And that's why I like what you're talking about, that you're not anti-efficiency. I definitely take that point. But when you talk about even just the third party data, it's like, look, you can do that effectively as an efficiency play to just have your prospecting and your quote funnels move faster and it's easier for brokers and all that. Nothing wrong with that.
Right.
But if you're bad at underwriting risks, you're just bringing in more money losing faster. So like recognizing, using that third party data and your focus on the vertical and understanding of it to do a better job in underwriting and pricing those risks and supporting them, handling the claims, all of that kind of stuff. That sort of gets back to the basics of being a profitable insurance company, and not like we're just going to efficiency our way past everybody else, because that game doesn't end up working out long term.
Yeah, and it's interesting, like as you're saying that, I'm just thinking of something. It's like it's interesting to just observe, at least from my perspective, like how this is representative of like cyclicality in industries. Like if you go back to, this is like a big cycle, but if you go back to the beginning of insurance and you think about even like present day Lloyd's of London,
Yeah.
which is the specialist marketplace, people think of syndicates as being experts in writing a particular exposure. And
Hmm.
then when you go to Lloyd's, you realize that what they really mean is there's like an underwriter
Yeah.
who has written boats with these characteristics that go between these two ports, that the person's like an expert in like the Adriatic Sea or something.
Yeah.
And that person is the one that you as a broker like want to have access to, you want to place your risks with. That hyper specialized knowledge is all in that person's brain,
Yeah.
and it's not necessarily the most efficient process. But again, like a lot of those placements are like, insuring a big boat doesn't have to be done in 5 minutes.
Yeah.
It's like anyway, it's
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 expertise.
how to come back. Yeah, it's
Yeah.
expertise.
Yeah.
Exactly. Yeah.
So, I mean, it seems like you're sort of combining the notion of, especially in small commercial, you can't be inefficient, you can't be wasteful, you can't be slow, because you'll never win any of the business because it will have gotten placed by the time you got around to it.
Right.
But you also can't not be an expert. So it's like it seems like you're kind of trying to do both of those things. We need to be efficient, clean, as straight through as we can be, and we have to be damn good at the actual understanding of the risk and what we do with it. Or if either of those things fails, then so do we.
I think that's right. And I mean, even as you're saying it, I'm feeling as though it's a daunting task because it's hard to do even one thing really well, as we all know, like in life. And trying to do both being really efficient and being really good at underwriting is certainly what like the best performing insurance companies in the world have always tried to do.
Yeah.
I think when we think about efficiency, I think a lot of that is rooted in how we think about software development. So prior to entering the insurance space, the first 7 or so years of my career was exclusively focused on systems development, management of engineers, product management, design, thinking a lot about sort of like those digital experiences.
Yeah.
And the thing that was really captivating about insurance was, even 8 years ago, as we were interacting, especially with specialist or specialty commercial insurance carriers, we're like, boy, there's a lot of room to kind of improve the experience, the buying experience.
Yeah.
And I feel like the nice thing is that what makes a really good digital experience not different from what makes a good underwriting experience. It's like fairly well defined, right? It's like make things easy to use, try to remove redundant steps, keep the user in mind. Like think about the digital experience you would like to have if you were in their position. All those things, which again, it's easy to say these things, harder to do them.
Yeah.
Whereas what we're observing on the underwriting side is that it's much more of an iteration, work in progress. It's always kind of a work in progress. You're always kind of getting smarter about what you're underwriting. And I think that that challenge is going to multiply as we move into other verticals, but that's part of the challenge and part of the fun.
Well, so I mean, you said right up front that you didn't say we're a restaurant insurer. You
Right.
talked about the platform and the vertical that you're focused on from the start is restaurants, but you made reference to moving into others. I'm not going to ask you to give away your whole market expansion strategy. I mean, you're welcome to, but I'm not going to ask you to. But how do you think about what expansion looks like? What does it take to bring that expertise and make sure that it's still there as you move into other verticals so that you don't end up playing a sort of like, how do we pump money into this engine and just expand? And then we end up, once the tail plays out, taking losses that we weren't prepared to support.
Yeah, so I think about that a lot. I guess first things first, we are like very optimistic about the amount of opportunity that exists just within restaurant. Like
Yeah.
we believe that the restaurant vertical can grow to be $100 million in premium over the next several years. Of course, if we're executing and we get a little bit of luck, like any company needs. Um,
That's
but
not a crazy number at all.
yeah, I mean, and honestly, it's a very small percentage of the total insured
Yeah.
premium
That's
restaurants,
not you
but
saying we're going to eat 50% of the market.
exactly. And the
Yeah.
beautiful thing is that if you have $100 million in premium for any program, you're in the top 25 largest independently held MGAs in the country, and therefore like sort of by default the world. And that's exciting. I mean, that's you're getting to the scale where you can start to do lots of really interesting things. So we see tons of opportunity. Today, we're only live in 7 states. We went live in states 6 and 7, Pennsylvania and Ohio, in the last 2 weeks of December.
I was
And
going
we
to say
only
it was
wrote
6 when we talked last time. So,
yeah, and we wrote our very first policy in July of last year. So
okay.
it really hasn't been that long at all, but we're
Yeah.
just very encouraged by the early demand. And like you said, I think we're receiving some, you know, good timing from the dislocation that's happened from traditional carriers sort of exiting the
Yeah.
space. Um, but yeah, I guess the idea is to have a few key things that we value, like having a focus on underwriting and like the belief that we can underwrite risk profitably,
Yeah.
because we're not a carrier, and because there is only so much we can sort of like hack the expense ratio. We don't have the benefit of being able to put customer float into assets that are going to sort of like offset bad underwriting. Like
Yeah.
we just have to be profitable from an underwriting perspective.
Yeah.
And I think what's most attractive to us is not entering a line and trying to, just meet the loss pick that the reinsurers peg to us. It really is, if you think the loss pick is here, we want to be here.
Yeah.
And we want to always be there. And we want that to sort of be like what we build our reputation around. So sort of having that specific focus, that prioritization of underwriting, and then it's like moving into these other segments while keeping a lot of those initial ingredients fixed. So like continuing to grow retail agent distribution and working with select aggregator partners, that's going to become like an ongoing muscle and a repeatable process.
Yeah.
Having a digital system, as I like to say, our quote bind issue system, it might sound arrogant to say this, that's not at all how I mean it. There's nothing digitally or technically from a software perspective that limits our platform today, even though it's at its very early stages, from writing hundreds of millions of dollars in premium. I mean, it's
Sure.
like once the rating and the form gen and things like that are there, my engineering team is probably annoyed that I just said that. But the truth is that, like, yes, there's little things we'll want to improve, but it's a lot of it's there. So then what becomes really powerful is how are you constantly adding those new products to your storefront? And then the last part of the challenge, really, that's a big challenge itself. But the last part is like, how are you messaging to the agents and educating them to
Yeah.
be really clear on your appetite? Because as you can appreciate, for those companies that have the very broad BOP with hundreds of codes, the thing that a lot of agents struggle with, and there's a lot of great companies trying to tackle this problem, is like, is this a contractor that goes on a roof, or is this a roofing contractor, or is this a landscaper that does little contracting? How am I classifying these risks? One of the beauties of being so focused is that, we specialize in like a handful of codes.
Yeah.
And that just gives us the ability to really look at those codes really hard and make sure that we feel good about kind of like what we're responsible for.
I mean that also changes the requirements for your system. So maybe your engineering team doesn't have to get too upset.
Right.
Because if you're not dealing with that level of really tricky nuance because you're so broad brush, like from a class of business standpoint
Yep.
or code standpoint, it just introduces all kinds of complexity that once you have to start solving for that, then you start hitting some other kinds of constraints, data model constraints, et cetera, that make it a lot harder to deal with growth.
Yeah, exactly. So at the level of the platform, we've thought a lot about making the questions that we ask, which is really like the primary user experience for an agent. It's like the questions. We've made that highly modular, excuse me, and not really too heavily dependent on engineering intervention. It's been built in a way that non-technical employees can modify questions, can add questions, can remove questions. Um, and that's like been really an important sort of like efficiency hack for us.
Yeah.
Another one is like, because we're admitted with this program, you have to get approved state by state. From when we get the approval from the DOI to when we could start selling policies through our platform from licensed agents, I mean, the time is like 24 hours or less.
Wow.
It's really just making some very minor modifications in the back end. And we
Yeah.
think that that's really powerful. And we also, I was just speaking about this recently as well. That's the type of thing that it's really hard to do that if you're using sort of like a mosaic of third-party tools that are going to impose their own limitations on you. And as somebody who builds software, I can, appreciate firsthand the importance of having limitations, because then suddenly everything gets out of control. But those are really the areas where we've developed a lot of flexibility.
Yeah.
Uh, so yeah, hopefully that's going to serve us well as we move into those next category. And again, speaks to sort of our front loading the mentality of repeatability with like
Yeah.
what we're building.
So Bobby, I want to try to understand this a little bit better, but you talk about the underwriting being better. How do you actually do that?
Yeah, yeah, great question. So I think of our like the I will tell you what the answer is not, which is that, oh, like we use data in some better way. For those that are just listening,
A
I'm
lot of
using
people say that.
a lot of people say that, and I think there is certainly value in using better data. We have like a three-pronged approach. Our digital system has our eligibility criteria baked into it. And that's really important because it filters out risks that we have absolutely no interest in. If you think about like underwriting, someone once broadly described underwriting to me as like risk selection and risk pricing, sort of like underpinning everything.
Yeah.
And then if you have experience, that makes both of those things much more effective. So if you think about risk selection, It's like we have these eligibility criteria built into our system. The agent answers questions. If they run into like a kill question, an eligibility that makes the risk invalid for appetite, we just tell them immediately. We don't make them go all the way through the form. And we've sort of very thoughtfully front loaded a lot of that part of the experience in the questionnaire. Because again, like you said, ease of doing business is critical. So we filter out the risks we don't want. That's the first thing, and that's a really important thing. And it can be very granular. Like, we don't want risks with this attribute in this zip code that have this building age, that have this type of other attribute. It's not just we don't want new ventures. Like, it
Yeah.
can be very, very granular, which is great. So that's the first thing. Then the second thing we do is we are constantly building new tools that basically use data that's available online, either through like a third party provider that has like their own proprietary data set, or using things. And this is one of the nice things about restaurant is there's a huge amount of information from like user generated content in terms of like reviews and ratings and photographs of the premises and all these things. And I can tell you like, so for an example for us is like we have businesses that write alcohol, but we don't really want businesses that stay open past midnight.
Hmm.
So whereas historically, someone could have said, "Oh yeah, like I don't think they're open past midnight," and just sort of go through the process, and then
Yeah.
a reinsurer only realizes that that was not the case once it's too late. Like we can just very quickly research that property and see like that the reviews are like this place gets especially wild between midnight and 2 a.m. We're like, okay, well that's we're gonna have to decline that risk.
Yeah.
And we're gonna have to keep an eye on sort of like the other business that that agent brings us. Now those first two pieces, I mean, like they kind of might sound somewhat punitive, but I mean, they have not really been a big hangup for agents. We've never had an agent come to us and say, submit something and say, I'm never submitting to you again because this system is too good at filtering out the risks that you don't want. I think that's one of those things that when people are getting into it, they're like, well, you kind of have to lead with your chin because everything's so homogenous these days. And, you know, if you don't write some of the risks you don't want, you won't really get the risks you do want. And
Yeah.
I just fundamentally don't believe that that's true.
Yeah.
And I think it's the first two pieces are really made possible by the third piece, which is critical, which is that we have experienced human underwriters that are underwriting. It's really not, like I said, just about straight through processing that passes, you know, as many of those inputs being pre-filled as possible into a rater and then just quickly returning a rate so that we can move on. Like the human underwriters play an enormously important role at Rainbow. So a couple of things. Number one, they're like a critical part of customer service. Um, no matter what any other insurtech entrepreneur will tell you, agents absolutely want to be able to talk to an underwriter. That's why the biggest insurance companies are like really so untouchable, especially in commercial. Yes, they want ease of doing business, so I think you have to do it in a thoughtful way. But having the ability to speak to an underwriter when you feel like the system is perhaps misinterpreting something,
Yeah.
that is really powerful. It's differentiating in and of itself. And it's also, this is another thing that we weren't really expecting. It creates this opportunity when our underwriter is on the phone with that agent, that's when the underwriter can say, do you rate a lot of these restaurants? Like, what other types of restaurants do you like? Right. And the person will be like, oh, I can tell you there have been a number of examples of agents that have brought us super attractive accounts with multiple different policies and like quite a bit of premium attached to them. Our average premium's just north of $10,000 a policy too. So we're not really going after those micro
Yeah.
$500, $1,000 binds. But that would only have happened had that underwriter had the ability to build a rapport with that agent. And I send thank you notes to basically every agent that signs up through like on email. And consistently, the thing we hear back from them is, we absolutely love your customer service and your underwriting. We want to make you like our preferred restaurant market, which is amazing. Like that's what you want to hear.
Yeah.
Um, anyway, kind of long-winded, but the risk selection and then constantly building the tools to better evaluate the risk and ultimately assign a price to it. And then kind of it's not really the fail safe, it's like the piece that enhances the other two and vice versa, that cycle is made possible by having human underwriters who underwrite. I
Yeah.
mean, the system could let in a risk and the data could be augmented based on the second prong, and the underwriter can absolutely still say no. And as long as you do that efficiently and you're transparent with the agent, we've found that they're going to come back.
Bobby, I've got a maybe a weird question for you, but it's one that I think a lot of founders 8, 10 years ago would have felt very differently about or answered very differently whether they should have or shouldn't have versus today with the funding environment, with the cost of capital, with where underwriting is at, et cetera. Um, you're in one vertical now, you're rolling out states bit by bit. What is the decision to add another vertical, let alone a state, but adding another vertical, what's the right or what's the balance that you're weighing between growth because you need to grow and you want to expand the business and get to scale and profitability and all that good stuff, versus we don't want to grow too fast, we don't want to overextend ourselves, we want to think about runway, balancing how much outside capital you're taking in from an investment stand, all those kinds of things. How do you meter out that balance in today's environment, or how do you think about that?
Speaking to the environment for a sec, I think it's absolutely not the environment, like specifically speaking about like the fundraising environment. It's
Yeah.
definitely not what it was even just like 2 years ago. I think it's
Mhm.
like quite different. Um, and I think what you're seeing is a lot of folks, as far as it concerns insurtech, who never really developed an expertise, or more importantly, like a point of view on insurance and value creation, like enterprise value creation,
Yeah.
are now just exiting the class, and then they're going on LinkedIn and being like, boo, insurtech. And a lot of times I think those are investors who sort of took that approach of we specialize in fintech. And they sort of, now hindsight 2020, mistakenly characterized what they had seen work in credit and lending and
Mhm.
mortgage. They were like, oh, insurance is just, it's just, I can't tell you how many times I heard insurance is just, like lending in reverse, or insurance is just whatever and whatever. And it's like, I guess that's true. And I don't think this is unique to insurance. I think each of these really are their own hard problem, made harder by the fact that they're each so heavily regulated.
Yeah.
Um, so anyway, as that realization happened, as a lot of the capital dried up, I think a lot of those investors kind of have pulled back. And so I think the environment might seem quite a bit more austere. But the good news is, to entrepreneurs that are listening, like, I firmly believe there are lots of great investors out there, even those that aren't necessarily branding themselves as like insurtech experts. And those folks want to dig in with you, and they're still looking for the same things that they've more or less always been looking for. It's like, who is the founding team? What are they trying to solve? Do I believe that they can solve the problem? Is the problem big enough? Um, Etc. So I think that that's like an important just sort of disclaimer on kind of my view on the market, for what it's worth. As far as like metering the balance between growth and profitability, I mean, the thing is, like, the of course the business has to grow, and once you take that outside investment, you are expected to achieve a certain level of return. And you kind of, not only can you not get there by just being the best underwriter, like that's also not great from a basic insurance math perspective. Like, if you are saying, oh, we're the best underwriter, look at the way we can prove that is that we wrote $1 million in premium in our first X number of years. First of all, they're going to be like, okay, that's nice, but like, I need a little bit more than that.
Yeah.
Not to mention that if your portfolio is too small and then you do get one of those big losses,
Yeah.
suddenly doesn't matter how well you've underwritten up to that point, right? So, and that, frankly, this is like a whole separate rant. I think that's where agents play such an important role in all of this. They really are your eyes and ears in the field, and they are your absolute best chance, if you ask me, far better than AI, at finding a good risk versus a bad risk. So to answer your question directly, I think growth still matters, certainly. I think we're sort of outside of the environment, at least in insurance, of grow at all costs.
Yeah.
And I think that if you can demonstrate underwriting profitability early on in a way that's differentiated, it was sort of like X number of years ago, there was the Paul Graham articles on Y Combinator, and he's like, startup equals growth. And if you're growing and growth in general, it solves all problems. I would almost take a different view, which is that, like, if you're an underwriting company as an MGA, if you can underwrite profitably, that will solve maybe not all your problems, but like most of the really hard problems.
Yeah. Yeah, that's a fair point. I want to end on one other maybe weird question. Um, and I think I know where you stand on this, but the tone the past, as you say, like couple of years is sort of from a lot of startups, sort of like we need to just tighten our belt and hunker down and just live through right now. And fast forward X years, and we'll be on the other side of this, and it will all be okay again. It's sort of like it reminds me of old school carrier thinking around like you just have to ride out the soft market, and then our strategy is like once rates firm up we'll grow, and when they're not we'll just hold back.
Yeah.
Is a sort of wait and see approach. My sense is you have a different view where it's like no, there's opportunity even when capital is tougher to come by, or this isn't a waiting out, this is maybe a change in the paradigm. And so you need to figure out how to be successful in this environment, not just waiting until someone will give you a check for $15 million in a couple of years. Is that generally your take? Like this isn't a moment of austerity. This is a moment of a different business philosophy.
Yeah. I mean, I think I have always, one of my favorite aspects of entrepreneurship is just like the classic risk reward equation. And so I sort of learned through experience early on that risk, to be comfortable with risk. And I think that it's my belief that like a lot of what the value that you create as a founder is sort of just your perspective and how you view things. So when everyone is, and sort of an easy hack for that is to just sort of take the other side of what the general population say. So
Yeah.
whenever it's like, oh, this is a really tough time, that should be your signal that like this is actually a moment of great opportunity. Or oh, it's really hard to start a startup right now and have it be successful. It's like, okay, but if we're at the bottom, doesn't that mean that if I start it now, things will generally only get better? Like,
Yeah. Sell high.
so I mean, I hope that that's what ends up
Yeah.
sort of being the path that we're able to follow. But I feel like in insurance, and I saw this firsthand in the specialty world where, E&S is sort of like the release valve for the risk that gets pushed into admitted. And then I've absolutely seen that again in programs. A lot of people just don't even know like how important a role the program industry plays. It's just like someone once said to me, in programs is where innovation happens in insurance, which was really funny to me because I'd always thought of it as sort of being this sort of sleepy part of the industry. But actually, that's where all the products that then become like the mainstream products are battle tested oftentimes.
Mm-hmm.
And yeah, it's those businesses are started at a time of dislocation.
Mm-hmm.
So it's like everyone else is pulling away from the market, they're running away. That's when I want to try to run towards the opportunity.
Yeah.
And that's really what we're trying to build.
It's a really interesting time in that respect with E&S. The relief valve is being used right now. There's a lot of activity of folks looking at or moving into or turning up their activity in E&S. So this is potentially another one of these growth moments. Like the stuff is forming now.
And that's, I mean, again, I completely agree. And I think that that's where sort of like we were saying about how a lot of capacity providers think about restaurants. So like, oh, we don't want to rent restaurants. It's like, that's exactly why I want to rent restaurants.
Yeah.
Like, because those businesses still need coverage, right? Like the thing that's undeniable is that people are going to keep going to restaurants and restaurants need insurance. So therefore, I mean, arguably you have product market fit the day you launch your product.
Yeah.
Because it's a forced placement and these businesses need this coverage to protect them. And so if you can do that and you can find these other segments and you can sort of bring a few of these things together and get some economies of scale, to me, that's a very complex business to build, but one that is like very interesting and ultimately very valuable.
No, that's great. Bobby, I really appreciate the time today. Thanks for sharing a bit of what you're building and telling us, and maybe give us a bit of hope for what's going on right now, that it doesn't have to be this dark period. It's a time of opportunities. Thank you.
Appreciate it. And this was a pleasure. Thanks for having me.
Thank you to Bobby for spending some time sitting down, sharing a bit of what they're building at Rainbow and why it's different. And I love that focus on the underwriting, and it matters. You can't just tech or efficiency or speed or low cost your way through to success. if fundamentally you don't understand the risk and you don't know how to price it. And so I really do appreciate their focus on that. And they're being really thoughtful as they look at verticals and how they solve for them and price them and support them and stand by those risks. Really interesting, fresh perspective, I think, or the perspective we should be taking, but maybe lost our way a bit with some of the startup activity over the past few years. Good luck to the team at Rainbow, and we will be watching closely to see as they add the next vertical or verticals after the restaurant space. And I hope that they're extremely successful. Thank you to all of you for tuning in. Make sure you come back next time for another great episode of The Future of Insurance. Just go to future-of-insurance.com, or of course, listen and subscribe on whatever podcast platform or YouTube you prefer. Thanks everyone, and I'll see you back here next time.